Hi folks, welcome back to our second video on this question, and what we're going to do is now look at what's on the statements for 2014. What we have here is first of all a statement of earnings, which is the income statement for 2014, and you'll recall that we did in a previous step 3 I believe, we recycled the cumulative unrealized, in this case gain, through to net income, so we credited the gain. So this gain is going to show up on this year's income statement as it did over here. Now what about in the statement of comprehensive income, of which net income or net income in the statement of earnings is a part? Well, what I did here, in order to show you the statement of comprehensive income for 2014, I divided it up into its component parts. You remember from a previous lesson we said that comprehensive income is equal to net income plus OCI, right? So now what we're going to do is I'm just making the assumption or plugging in a number here that net income is 100,000. Again, I'm making that up. Nowhere in the question did it tell me that, but I'm just going to use it to show you the calculation. So if I assume that net income, which includes this gain, is 100,000, now I have to determine what is OCI for 2014. So OCI is really the unrealized gains and losses that I would have booked for 2014. So what does that represent? Well, first of all, I actually booked an unrealized loss for 2014 of $2,110. And you're probably saying, well, show me that math because I don't get that. Well, we can show you. So if you have a look here, if you remember, going back to the question at 2014, there were two amounts that slipped into OCI during 2014. First of all, in step 1, we had the unrealized gain. So if you go back here in step 1, you remember that we processed an unrealized gain of $990. That was to adjust our investment to its market value before we processed or recorded the sale. The other thing we did, now again that was on May 20th, that's in 2014. The other unrealized gain or loss that we booked was dealing with the adjustment of the portfolio at the end of the year, December 31st. And if you remember, we did a debit. We unrealized gain or loss to bring it from 654.1 to 651. That was our $3,100 adjustment to the portfolio, which brought it down, right? So we credited the investment and debited the unrealized gain or loss, which is really a net loss, right? So if we go back to our statements now, our unrealized gain or loss for 2014, what got processed this year into comprehensive income is negative 2110. So that's your negative 3,100 or your debit to the unrealized gain or loss account of 3,100 plus your credit, your unrealized gain from step 1. So netting these two out together tells us that we processed an unrealized gain or loss in 2014, just the current year, which is an unrealized loss at net, 2110. However, we have to deduct from that any unrealized gain or loss that we recycled into net income. So we know that's 990. Where do we get that? Well, we're going to get that from, we would get this 990 from step 3, right? Because don't forget, any unrealized gains and losses that are recycling to net income are what we call cumulative, right? So they're going to be the cumulative gains and losses that were unrealized on the Nirmala investment, those 3,000 shares, since the day we bought them. But we only have them for 1 year. So that's just the 1 year of 990. So we would go to step 3 to find this out, because that would be the cumulative amount right here of the gain or loss that got recycled into income. We debited the unrealized gain here, or gain or loss for 990, to move that gain that we booked here out, right? Because we're recycling it into net income. So we would get that from step 3 because this would be the cumulative amount. So from any OCI that we book this year, we deduct the recycled unrealized gains and losses to net income cumulative, right? It's got to be cumulative because we're looking at all the gains and losses that we've been holding in OCI and then releasing all of them into net income. It just so happens that we sold the investment in May of 2014, but we've only held it since the beginning of May, right? Or sorry, since the beginning of 2014, because this is the only year we've had these investments. So it happens to be 990, right? The only one we have. So if I go negative 2110, which is what I'm doing here, because that's my unrealized net loss, right? Less or minus my unrealized gain, so minus a positive number, which is 990, it gives me negative 3100, which is now going to show up in my AOCI. I didn't have any AOCI to begin with in this question. At the beginning of 2014, it was 0. Why? Because I didn't have any OCI investments. The question said this is the first year that you even had OCI investments. So I bought them, and one of them, I sold part of them by the end of the year. So this whole amount is going to go to AOCI to update it for the year. So now, if I go in now to calculate my comprehensive income, I've got what I assume to be net income at the beginning, plus my OCI, right? Oops, sorry, this looks kind of ugly. Plus my OCI, which was what I booked just during the year, transactions that happened during the year, which is negative 2110, which I explained to you down here, right? Less any cumulative unrealized gains and losses on those 3,000 Normalis shares that I recycled into net income. But it just so happens it's only what I had this year because I didn't have them in previous years. So the cumulative unrealized gain or loss is only the gain, that unrealized gain I had this year, which is 990. So I can go back and get that just from step 3. And so I take my negative 2110 minus or less, which is here, my unrealized gain, which is positive 990. So this minus goes with the less. This 990 is the gain. So you can go minus a plus if you want. Make it, because this is the gain, the plus 990. So negative 2110 minus a plus is negative 3100. And that's going to go into my AOCI to update it. Okay, so my comprehensive income would be net income plus my OCI, which is plus a negative, which is going to give me 96,900. So now if I had to do my statement of financial position, which is my balance sheet at the end of, should be 2014 here, I guess. That's going to give me 651,000, and again it's a long-term investment, so it's your non-current asset section, fair value through OCI 651. How do I get that? Right over here, because that was my fair value at the end of 2014, for which I made a fair value adjustment of 3,100 to get to it, right? That's what I did here. I made this adjustment at the end of 2014 to get it to that. So my balance sheet, it's got to be sitting at that. Right? And my AOCI, we just said in the shareholders equity section, it started at 0. I didn't have a balance in there because 2014 was the first year that I even had OCI investments. So therefore, it would start at 0, and the only thing that went into it in 2014 is this negative 3,100. So the amount that I would have in there, I should have put a bracket around this, would be negative or a debit balance in AOCI of 3,100. So that would give me shareholders equity AOCI a negative balance of 3,100. Okay, and how do I get that? Because I have my negative 2110 minus my 990. So this is the total amount by which OCI changed during the year. What I put in it during the year plus what I recycled into net income. So that means it's negative 3,100, and that's going to go into AOCI. So this concludes our video on this question that showed the statements for the previous video for statement of comprehensive income, statement of earnings, and the statement of financial position, and what amounts would show in there for your fair value through OCI investments. So I hope you found the video helpful.